What's up, YouTube? Gonna walk you through a 10K report again today. Last time I did this was with Coca-Cola Company. Today we're using Facebook, so slightly different company. I wanted to show you how you find these. Basically, I search Facebook and their either their investor relations or financials or SEC documents, and it takes you to a page like this. And notice that there's these Form 10Qs. These are for each quarter, and these tend to give you more financial heavy type stuff. Today we're going to walk you through the 10K, which has a little bit different. It's basically serves the same purpose, but walks you through more of what the company does. Obviously, with a company like Facebook, we're all fairly familiar with what they do. But you might be researching a company you've never even heard of, and so being able to dissect their 10K, where they talk a lot about how the business operates, might be beneficial to you. So this first page shows you can go knock on their door if you want. You can give them a call if you want. There's their phone number. Uh, the basically the biggest piece of information here, it tells you on a date the number of shares outstanding. So there's a huge amount of these class A shares standing. You see 2.3 billion, I guess that is. And then there's often with these companies, we could have a whole video kind of on different class structures, but there's this other class of share. Typically the other class of share that has a smaller amount, I don't want to generalize, but typically this is held by Mark Zuckerberg or some executives. It often either gives them voting rights or a special dividend or something, but that's something to be aware of as you're buying these as a shareholder. Table of contents. Not maybe necessarily on here, but on some of these you can click and they take you to these, which is helpful if you want to go right to executive compensation, see how much these guys are making. Good click right there, it'd be kind of nice. Otherwise, you have to zoom down to this page in section. Forward-looking statements. This is just technical mumbo jumbo, but if you want to read it, you can. Limitations of key metrics and other data. This is actually kind of interesting for Facebook in particular because they talk about this daily active user number and this monthly active user number, and then they start telling you, they give you specific markets where you might get different kind of data, and they kind of dissect this, false accounts. There's some interesting stuff in here as you dissect this early part of the 10K, which is typically a little bit of legal mumbo jumbo. Part one is often an overview in all these. And obviously, again, with Facebook, we're very familiar with what they do. Typically, they have Facebook, they have Instagram, they have Messenger, which they've kind of broken out from Facebook. They have WhatsApp, which was a purchase of theirs, and Oculus, which is like a virtual reality product. I don't think it generates a whole ton of revenue for them. I guess we might find out. But it is maybe a bigger part of what they do in the future. You never know. Competition. This is often included. I didn't see in here Facebook naming anybody by name. I see some companies just straight up Google, Snapchat, Twitter, etc. But they don't name anybody by name here. But you can get an idea of the competition. Again, with Facebook, we're aware of their competition. We're aware of the market they play in. But if you're looking at like an oil driller or a gold miner, it might be kind of interesting to see the other investments and the other competition out there. Technology. So they show, here's some hard facts for you. So our research and development. This is like, guys that are, really researching and developing new products, new features on Facebook and Messenger and Instagram. Look how much they spent. 6 billion, 5 billion, 3 billion. This is all for the last 3 years. And notice how much is going up at Facebook. Obviously, their revenue, as we see, will go up too. But some hard facts right off the beginning. You see that, technology, you'd think this would be a little bit longer for Facebook, but they show you right off the bat how much they've spent and how that's increased. Sales and operations. So they say here's more hard facts: 40 sales offices. This is typically what you're using these 10Ks for. Is you're trying to pull out either a very specific piece of information, or you're trying to just get general facts about the company and maybe develop some kind of investment thesis off that. But five support office, 40 sales office around the globe. Kind of interesting. You might, as you use Facebook, you might not realize they have all these people, on the back end trying to sell advertisers to buy ads on the site. So there's people behind the scenes supporting those advertisers. So it's kind of neat. Marketing says their communities have grown organically. I have seen some Facebook advertisements on TV. I think they've advertised Facebook Live, and they probably pay for some of this content. I think they actually pay for people to post and stuff on Facebook, and maybe some of the early days they might have paid for some marketing agreements. So it's not entirely accurate. But you get the idea. Facebook will give them the benefit of the doubt. They've grown quite a bit organically. Intellectual property, they don't break it out here. Sometimes I've seen with some companies actually they don't maybe list out all the patents. Maybe if it's certain companies might list out very specific patents. If it's very specific to their company, I sometimes see a total number of patents, but they say we do not believe our is dependent on any single patent. So it shows you that Facebook isn't really defensible, quite frankly. Anybody can start a website or a social network, and if a bunch of people go use it and leave Facebook, it definitely leaves them vulnerable. Government regulation, this is probably getting longer and longer, especially with the CEO opening his mouth quite a bit, more and more, it seems like. So, but it's not really related to that. You got protection of minors, there's consumer, there's data security, there's all these things. The more people that are on, the government is going to regulate Facebook. This is not something they had to deal with maybe as much a couple years ago, but now they're an integral part of people's lives, and so the government's going to be on there. And then other, European Union and other governments around the world definitely going to get involved. So as you can see, this is a lengthy, it's becoming a lengthy section. So something that, if you're looking at risk factors or kind of, looking for this kind of segment in the 10K, it's definitely there for you. Employees, this is, now I will say if you want to know the number of employees, especially over time, you could go back and look at the 2015 10K, 14 10K of Facebook and see how their employees have grown or shrunk over the years. I'm sure they've grown. But for other companies, if you want to know the total number of employees, sometimes it's on websites, but you don't really know if that's accurate. That employee number is typically dialed down pretty accurately in a 10K. Not all the time, but pretty close. Corporate information, again, they give you a phone number. You want to give them a call, things like that. You certainly can, especially if you're a shareholder. Some of this stuff we'll skip through. Again, this is telling you where there's available information. You can go to the SEC website. They have Zuckerberg's Facebook page on here, which is unique to a website like this. I encourage you to find the SEC documents on they show you here, investor.facebook.com. Risk factors. So this is always typically pretty high up on a 10K, but not as high up or as presented, or sometimes it's not even included in the quarterly reports. So the 10Qs, you don't often see risk factors unless one's added. Sometimes they're in there, but sometimes not. So if you're looking for risk factors, and this is great, again, with Facebook, we know, hey, there's Snapchat, there's Twitter, there's, risk of people leaving the site, whatever, getting disinterested, whatever it might be. So we kind of are familiar with them. I'm still going to walk you through them. But, oil drilling, natural gas, frackers, I don't know. There's all kinds of business models you might not be as familiar with, like medical devices or something, curing cancer, things like that. Reading through the risk factors might help you out. But we'll highlight some of these. if Facebook fails to retain existing users or add new users, or their users decrease their level of engagements, their business may significantly be harmed. And they talk about, hey, this would not be good. Basically, it's telling you all the bad things that can happen from that. Obviously, we can extrapolate a lot of this ourselves, but again, with these 10Ks, it helps you kind of think through that thought process. This is a really good one. We generate substantially all our revenue from advertising. So, again, they give you some hard stats here. For the last 3 years, 97%, 95%, 92%. So it's actually getting, Facebook is increasing their dependence. I mean, it's already ridiculously high, but they're basically like Google, where they make all their money from advertisers. So if advertisers go somewhere else, advertisers shrink their budgets, advertisers just stop advertising, or they just don't increase their budget, they just kind of keep their budget the same on Facebook, then yeah, their business is going to be harmed really quickly, because almost pretty much all their revenue comes from that. So that's definitely a risk worthy of being high up on an annual report, because all the revenue comes from this. So it tells you all kind of the risk related to that. Our user growth monetization of mobile devices depends upon operations of mobile operating systems, so that we do not control. That's really the key thing. Most of us are accessing these on an iOS device or on like a Google device, and in some ways Facebook and Apple and Google kind of all compete against each other, or kind of are compete, especially Google and Facebook especially, are competitors against each other, because they're both vying for the same advertiser dollars. Facebook and Google rely on clicking on ads or looking at ads, and oftentimes those ad buyers are the same people. Whereas iOS, Apple relies on selling iPhones and making money on that, it's kind of selling plastic, but that's a whole other argument. But the key thing is they don't control those. So iOS could ban Facebook. Obviously, that's not something they want to do, but those are the kind of things that can happen. So their business is highly competitive. I think we all realize that. Kind of a website market, it certainly is. Action by government. Again, we walked through this. This is getting more, especially in they're restricted in whole or in part in China, Iran, and North Korea. North Korea, I think we understand. Iran as well, but China is a huge market. Obviously, the biggest market in the world in terms of population. And they already have kind of I don't want to say state controlled, but state influenced social media there already. So the odds of Facebook, Mark Zuckerberg is going to do a tremendous amount of sucking up to get into China. But if that ever happens, that'd be nice. But the government here in the United States could limit Facebook somehow. I don't know. There's a lot of different things that could happen. You never know. Our new products and changes to existing products could fail to attract or retain new users. Again, they've invested, they say here, significant portions into WhatsApp and Messenger and Oculus and all this other stuff. That's about it, really. Instagram. But if more people go to Snapchat or Twitter, or stop using social media altogether, or YouTube or whatever it is, then it's going to be trouble for their stock, that's for sure. Then some of these are a little bit more plain vanilla. I think they try to, I don't know if they rank these in importance, but security breaches, certainly something that you want to be aware of. If Facebook were to suffer some massive security breach and kind of lose the trust of all its users, and all of a sudden, we're like, ooh, we're scared to post on Facebook anymore, that obviously could basically ruin the whole company. Unfavorable media coverage. So again, Mark Zuckerberg has come out against Donald Trump, and while there's a large portion of the country and portions of the world that will be supporting him, Donald Trump is the president and he won, so there's obviously going to be some people that are going to support Donald Trump and might not like that Mark Zuckerberg is speaking out and might not like Facebook anymore, might like Facebook less because of his vocalness. I'm speaking more on government, but that's where the media coverage is going to come from. Typically on Facebook, is if something bad happens, or something weird happens, or if Mark Zuckerberg or an employee there makes news. So definitely something you want to be aware of. Our financial results will fluctuate quarter to quarter. And they are difficult to predict. I will say that, but Facebook has been steadily increasing. I think we'll get some financials here. At least right now, when they're in still in growth mode, or kind of still in inflation mode. I wouldn't say they're still in growth. They're definitely in growth mode, but the advertisers are doing well on it. They expect our rates of growth to decline in the future. I mean, here's a company, they're never going to come out with a press release saying this. That's what's so great about these 10Ks, is you get a lot of just downright truth. We expect our rates of growth to decline in the future, period. I mean, that's Facebook just says this. So their user growth and revenue growth will decline. So they're going to have to penetrate. That's why they're investing in Oculus. That's why they're trying to penetrate these other markets, because, here they're telling you right here, our growth is going to decline. Our costs are continuing to grow, which could harm our business. This is typically, everybody's going to say this. With Facebook, it's different. We've looked at Coca-Cola on our YouTube channel. I have a video where I've looked at Coca-Cola and Under Armour. And both those companies basically manufacture something. In the case of Coca-Cola, they've got sugar water. And in the case of Under Armour, they're selling cotton or like polyester. Facebook's totally different. They're not buying something to resell it or manufacturing something to resell it. They're just like, they have like a platform, like a website that people are like talking on or sharing stuff on. And on the side are advertisements. So it's very much like Google. So their costs will continue to grow, but I would argue that a company like this has the ability to cut costs. They can be a little bit more nimble. Whereas if Under Armour or Coca-Cola makes too much of their product and it's sitting there not selling or whatever, that's cost that's out the door. Complex laws, I would, look. They're telling you right here that all these court decisions and stuff, and this is something, if you're searching for this, that's definitely in these 10Ks. Oftentimes, we've been subject to regulatory investigations and settlements, and so this is more legal stuff. You can tell the 10Ks especially are very much influenced by attorneys and lawyers. If we were unable to protect our intellectual property, they told you, and I would argue, Facebook's intellectual property is probably less important than the security or like the integrity of that side of the website, of not letting people hack Facebook, is probably more important than protecting intellectual property, because Twitter and Snapchat and all these sites kind of borrow from each other. They're all very similar in some ways. They're expecting lawsuits in the future. I think you can expect that with all business. Lawyers get richer. Says we're involved in numerous class action lawsuits. He said, typically, and again, unless one really hits that 6 o'clock news kind of primetime thing, these can be expected, and they have lawyers on staff full time. You might as well put them to work a little bit. We may incur liability as a result for information retrieved from our transmitted. So again, that's what I would say is a risk here for me. Outside of Facebook telling you their growth is going to slow down and everything's going to slow down, they have this like fake news, misinformation, hoaxes, stuff like that could damage their brand a little bit. Here's another really good one. Our CEO has control over key decision making processes. So it talks about, here's where I talked in the beginning about you have Class A common stock, Class B common stock. It's going to describe now the separation of that. And it's all about Mr. Zuckerberg maintaining control. That's why they've got to have two classes of shares so he doesn't get diluted out. So if the company needs to raise money with one class of share, okay, they're going to raise money with this, so they're going to issue this to the public. But Mr. Zuckerberg's going to hold on to a different class of share, and this is going to have like more voting rights or whatever. It's all about this right here, this word control. So he wants to he feels like it's his website, his vision. He wants to maintain this control. So there's two common shares, and that's also a risk factor. Mr. Zuckerberg starts smoking too much 420 or just starts going off on, kind of left-wing kind of things that piss a lot of people off. I could certainly see that. He could turn into an uber liberal and just piss off a huge amount of the country, and all of a sudden Facebook, its growth peaks because of the CEO. Certainly a risk factor. Talk more about the separation of this control. Very interesting to see this on all companies, especially if you acquire, if you're acquiring 10 shares of Facebook or it's just a small investment for you. I wouldn't stress over this stuff too much, but certainly if you're building up a large position, you want to look who has control here. We plan to continue to make acquisitions. This is how they're going to grow. So they purchase WhatsApp, Oculus, Instagram. They tell you how much they purchase them for, which is kind of neat. Tell you they might not be able to integrate it. So far they have. I would argue that Instagram was integrated nicely. WhatsApp, it's not really it's used in the United States, but I think its market is overseas. And Oculus, I think, is something that's still another year or two away, but is viewed as kind of a market leading, at least in that field. Talk more about goodwill here. And intangible assets, so stuff you can't see, so the Facebook brand and things like that. Some of these we're going to skip. Again, they're talking about average revenue per users, daily active users. This is stuff that's not important necessarily to the users of Facebook. So if I'm posting my video on Facebook, I don't care what their average revenue per user is. However, if I'm an investor and I'm being fed this information and it turns out not to be accurate, that is a risk factor. And Facebook has misclassified and kind of, misrepresented some things in the past. They've actually disclosed that to investors a few different times. I think it was on video views just in the last 12 months or so. So they might not be able to effectively manage their growth. I think this is like a good problem to have. You'd like to say that. You'd like to argue this is a good risk factor here. A company that's growing so fast they might not be able to effectively manage it. I think I'd take that risk. Key personnel, this is a risk factor here. They view Mrs. Sandberg and Mr. Zuckerberg as key personnel. And I know she has political aspirations, as probably he does. And I certainly expect them to move on from this company at some point. But probably be a pretty well-oiled machine by then. May not, again, Facebook's telling you we may not be able to continue to successfully grow usage. They stated it earlier, and now they slip in this May, but they're basically telling you we're going to slow down sooner maybe than later. Who knows? So this is maybe dated a little bit. That use Facebook on personal computers. Personal computers continue to decline. I think there's some evidence where this is not necessarily something to worry about as much, but we'll see. They're talking about how they're expanding. They got 100 different languages. It gets pretty complex. They're in 30 different countries. Pretty cool. Again, they tell you it's not available in China. If that market ever opens up, the stock would definitely shoot up very quickly. Some of these are a little bit more general. Here's a neat one. We may face inventory risks with respect to Oculus products. So if they stock, if they make a bunch of headsets thinking a bunch of people are going to buy them, and then people don't buy them, there's overstocking, understocking, all this stuff. Tax liabilities. Certainly a company like Facebook will benefit if there's repatriation and corporate tax reductions in the United States. That would be a plus for all businesses. So their Class A stock, so they say it was at their IPO price was 38. I think now it's like 138 almost. So it's gone up a lot in about 5 years. Um, so here they tell you the stock has ranged from 1755 all the way up to 133 as of the 31st of December 16. So the stock has quite a range. I think my dad actually bought it somewhere down in this range, and I think he still has it. So he's doing great. But just talks to you a little more general information here about that. So this is a good one here. We do not intend to pay a cash dividend for the foreseeable future. This is going to keep the stock out of the hands of a lot of people, especially holding the stock. This really tells you the only way to make money on this stock is to buy it and sell it. You cannot buy and hold Facebook shares and make money. You can make money on paper. Your Schwab account or your Fidelity account can look better, but until you have that cash in the hand, you have nothing but paper gains. Some people more than others. But when they pay a cash dividend, it might be time to get in. The dual class, again, they describe this dual class, which is kind of nice, where they talk about the Class A common shares, Class B. Here again, they're talking about how it's a controlled company. Okay, they're controlled, under control. Most companies are set up in Delaware. Don't trip. There's something about the taxes there. Pretty much all companies I see are incorporated in Delaware. Properties. So this is neat. I think for Facebook, it's not, they don't have storefronts, they don't have stuff like that, or a lot of stuff going on. They probably have data centers and things like that, and they do talk about that here. But they give you their headquarters. It's quite expansive. It's where a lot of the employees are located, and where a lot of the business gets done. Legal proceedings. This is always a fun one in any 10K. For some companies, it's more important than others. Some companies are in the business of just like suing people or like patent trolling and things like that. So that it's always fun to kind of dig through it here. But legal proceedings will give you kind of an outline. Like they start like this case. Everything's usually done in a whole paragraph. And so they start the case here and they kind of walk you through all the stuff that has happened. And so it's kind of neat. They don't have a ton of it. Mine safety disclosures, again, this is legal stuff, not applicable. Facebook isn't mining for anything quite yet. Market information for common stock. This is kind of neat. If you're looking, you're looking to maybe buy Facebook stock or sell it short or whatever you're trying to do, this is really cool because it gives you like the range. So here's 2016, here's 2015, and it's showing you the high and the low for the first quarter all the way through the fourth quarter. And so you see, you know, you can kind of see just on the last couple of Facebook, it's not as well defined as a lot of companies that that you sometimes look at, but I see this number 89 or numbers very close to 89 as a really nice. Once it broke out, it seems like over this level, it Facebook had a tendency to then pop to much higher numbers. And that's it really gives you kind of a range. And so at Facebook right now, I actually kind of want to buy shares of Facebook, but at this 130 price range, I'm paying towards the high end. That's not necessarily a bad thing. Stocks can keep going up and up and up. I mean, if you would have bought it at the high range over here, you still would be doing quite well today on an investment over even just over 2 years. But not that you're trying to time the lows on these things, but obviously you're trying to buy closer to this lower end. So I'm trying to wait for maybe Facebook to have either a controversy or the whole market to kind of pull back a little bit, and then that's when you want to jump into high quality names like Facebook. Holders of record, this is cool. So there it tells you right now that there were 4,767 stockholders of record of this Class A stock. And that was when it was at $115 a share. And now this Class B stock, this is the insider guys, only 72 people hold this Class B stock. So it shows you how this is where all the control is with 72 people. And this is all the common people out buying it in their E-Trade account and stuff like that. That's a lot of people. I've looked at some companies where they've been warned, like this number has to get higher. Otherwise, you can be dislisted. Obviously, something like Facebook is not worried about that. 4,000 people, that's a lot. It also gives you a sense this isn't a lot of people. Okay, for when I say this number is a lot, this holders of record number is a lot. It's a lot compared to other companies. But if you think about it, think about how pathetic this is. A company as popular and as big as Facebook, only 4,767 people own the shares. That's why there's a 1% in the United States and a 99%. It's because 99% of the people have their head up their butt and they're on YouTube right now looking at cats pawing at a string of yarn. Whereas you are doing yourself a good service, you have a much better chance of being wealthy because I guarantee you, most of these 4,000 people right here are smart, wealthy, savvy people. This is the person you want to be. I mean, obviously you want to be one of these people over here, but these guys had to work hard. These guys had to make Facebook and do all this work and stay up all these nights coding. All you had to do over here is click a couple buttons on your E-Trade account and watch Mark Zuckerberg change the world. So this is the kind of person you want to be. You're well on your way because you're watching a YouTube video on how to read this stuff. So nice job. Dividend policy. We've never declared a dividend, and they don't see for the foreseeable future. They did do a buyback program. They might have that on here. Purchase of equity securities by unaffiliated purchasers. It looks like, here it is. So in November 2016, so just last year, they also authorized a $6 billion share purchase program of their common shares. So this is what's known as a share, it's called a share repurchase program, otherwise known as a buyback. And it does not have an expiration date. And this is not, they're not obligated to do that. They authorize it. It can sit here for years and they never buy any shares. I will say this. Companies typically are better at running their company than buying their own stock. I almost rarely see companies. Banks maybe will be the exception. If you see like a bank doing a buyback or a CEO of a bank buying his or her own shares, I don't want to say you can like jump in and buy two, but you might be able to read more into that. But I've seen a lot of companies have these buybacks, and then you go look at the price they paid for their shares, and it's not always the best price. But what it does is it lowers the number of shares. Again, we've seen they don't have the total number of shares here. Um, we saw that on page number 1, but it lowers that total number of shares. It does a couple different things. I don't want to get too technical on it right now, but this is shareholder friendly. I don't want to make it sound like it's not shareholder friendly, but keep in mind, $6 billion. Facebook is like a, I don't know, a 300, $400 billion company, I think. Maybe not quite that big, but it's a huge company. 6 billion, not a huge buyback, but it is shareholder friendly. In lieu of a dividend, it's not bad to see. Stock performance graph. This is neat. This graph assumes that $100 was invested on the close of May 12th, was when Facebook, I think, was an IPO stock. So if you just had $100 and you bought Facebook's stock, you'd be balling. Okay, you'd be doing pretty good because it would be worth upwards of $300 a share. The S&P over that time would have gotten to about $200 a share, and the NASDAQ composite, which the Facebook trades on this NASDAQ exchange, just a little over that. Pretty cool graph. This is some like motivation right here. Don't try to get rich really quickly. I mean, look at, even if you tried to get rich quickly on Facebook, there are some like pops in here where the company has had some nice pops, but if you had just held the whole way, even if you bought on some of these pullbacks here, buy on some of these pullbacks. Oh, here they're telling you securities authorized for compensation. So they're just telling you, they don't really say it here, but employees are compensated with shares, and the better the shares are, the better they can be compensated, the better workers are going to get. Select financial data. Now, if you're looking for really meaty financial data, I will say you want to come over here and notice on this fourth quarter results here, they have the 10K here, but then they have income statement, balance sheet. So they break it out separately, and they have the earnings slide here, or earnings release here. Okay. Notice they don't do that for the third quarter, second quarter, first quarter. Not all companies do it as clean as this, but I'm giving you a general idea how it works. Okay. On these Form 10Qs, if I were to click on this, it's going to take me to a document that is just going to have financial stuff. Once we get past all this legal mumbo jumbo, bang, it takes us into assets, cash, marketable securities, bang, right into the hard numbers. Okay. Notice we're on page, 31 until we get to that. So if you're looking for hard numbers, the 10K annual report is not really what you're looking for. If you're looking for hard numbers, look for the most current balance sheet, the most current earnings release, something like this. It's either going to be broken out like this, like Facebook, or these are going to be like 8Ks. 8-K is typically when you can, or they're at the bottom of press releases and stuff like that in these transcripts. Otherwise, find the most recent quarter and just bang out the 10Q, and it's going to take you to this kind of stuff. But if, you're, again, 10K sometimes give you a window into the company. If this was a gold miner, a home builder, or something like that, you didn't know that industry very well, select financial data kind of introduces to a lot of this stuff. So it's talking about revenue here. What I like about these annual reports too, they give you a broader scope. When you go to these 10Qs, typically they're only going to give you a quarter over quarter, year over year. And if you want to get a broader comparison, you have to open up a bunch of these 10Qs. Whereas the annual report will show you typically when they have nothing to hide, especially Facebook has nothing to hide on this revenue number. So they're going to stretch it back as far as they can because it's really impressive to go from what is this, in millions? Keep in mind too, this is all in millions. So they didn't have $5,089. Now that, that would still be impressive for almost any website. But this is $5 million, okay? And now, excuse me, it's $5 billion. And now we're all the way up to $27 billion. So steadily increasing the amount of money that they're bringing in. Now, the really amazing thing to me, total cost and expenses. Okay. This number is scaling up very nicely. This number, if you notice, this has gone from a 5 to a 27. That is like times 5 and some change. Okay. This number has gone from a 4 to a 15. That is only scaled up by a factor of about 4, even less than 4. So this is scaled up over a factor of 5x. This is scaled up by a factor of less than 4x. That's showing you that I just love to see that with a business. Typically, I will tell you, a lot of times you see businesses, it's not like that. This revenue might grow like this, but then the expenses and the total cost of it also is growing even faster. And obviously, the longer you do that, the less money you make, and you might even lose money. So this income from operations, look at this. I mean, Facebook is just really efficiently scaled up onto an amazingly profitable platform. Because we get down to the bottom line. You might always wonder, how much money does a company make? Just do a find and replace. You can do a control F or something. Just search for net income. If you want to get really technical, I think there's some rules actually in SEC actually changing some rules. You got a lot of non-GAAP net income. So these companies like to change this net income and make it look as good as possible. Okay. But net income, I think they're trying to change the rules. Net income is, sometimes you see the letters GAAP, otherwise known as GAAP. GAAP net income. That's what you're always looking for. Not all the time, but that's typically what I'm looking for. And Facebook gives it to you right here. A clean 10 bill. I mean, look how fast they grew just year over year here. It's incredible. Now it's showing you earning per share. So every share of Facebook earned $3.56. And we see year over year how that has grown. Now, that's where a buyback comes into play, because this is giving you, and again, basic and diluted. This, diluted is all the shares basically. And this is the number I typically look at, this diluted number, especially if these are really different. They're close enough on here with Facebook that it's not that big of a deal. But that's where a buyback will come into play, because this is essentially dividing this net income number by the total number of shares. And so if they're buying back the total number of shares, reducing that number, this number could stay the same. They could reduce the number of shares, and all of a sudden earning per share could go up with net income staying the same. That's oftentimes the balance trick. That's a little inside Wall Street stuff. That's balance sheet trick stuff that a lot of companies do, especially in kind of sideways or down times. They just buy back their shares. Revenue sometimes goes down, but then earning per share, that kind of top line number. That's why you can't always look at that earning per share number. You got to dig down, see what the net income was, see what the total number of shares outstanding, etc. Now they're showing you the cash. Facebook stacking the cash. Look at that. They're making this net income and they're stacking the cash. very light assets in terms of property and equipment. It's probably a lot of server stuff. No debt, so you like to see that. Very few total liabilities, quite honestly. Free cash flow, something you always like to see with all companies, and they've got a lot of it. Look at this free cash flow. Free cash flow is net cash provided by operating activities. So this is saying Facebook operates every month, okay, every day, every second of the day. And while Facebook is operating, they are generating cash from advertisers, and they're also spending cash on employees, on rent, on servers, on, all this stuff, salaries. Okay? So those are the operating activities for a company like Facebook. Obviously for Coke, it's making the water, making the soda and the water and whatever, and getting it to the store and all that stuff, and the gas. With Facebook, again, it's computers, it's people. That's really what it is, computers and people. That's the operating activities. And the net cash provided. Provided is kind of a weird word, but that's net cash basically earned by these operating activities. So they earned, again, this is in millions, $16 billion net cash. So after all their operating activities, this is what they earned. They purchased some equipment. So when you have these quotation marks here, this means it's a negative number. So instead of putting a negative sign here, they put it in quotes. It means the exact same thing. Now you're looking at free cash flow, which basically means this is cash flowing to the bottom line or into a bank account or into shareholders' pockets or whatever you want to look at. In the case of Facebook, it's Facebook is basically stacking this cash up, reinvesting in the business, buying new companies, etc., etc., etc. Now they're giving you an overview of the results. So this is kind of like kind of a press release here. Essentially, you typically see this. Effective tax rate. Look at this. Effective tax rate was 18%. I think Donald Trump wants to bring it down to 10% or 15% or something like that. So it just shows you that, some of these companies already have a really low effective tax rate. So, if Donald Trump lowers the tax rate down to 15%, will they be able to pay 5%? I don't know. But it's just showing even 3% on Facebook on, $16 billion of free cash. It's a lot of money. So it's still going to be a tangible amount, even if it's only a little bit. But that's something to keep in mind when the not necessarily just Donald Trump, but any politician is talking about lowering the tax rate. You want to look at their effective tax rate already. They might be down at that rate already. And I don't know if they'll be able to cheat and cut their way even further. Who knows? Maybe they will. It's just showing you some trends, some daily active user trends. Again, this is looking nice, but again, they told you earlier that this was going to peak out and it was going to slow down. I like how they show you kind of US and Canada here. They're showing you Europe, the trends in Europe. Asia Pacific, we see the Asia Pacific's actually growing faster. That's pretty neat. And the rest of the world. Monthly active users worldwide, US and Canada. Notice, we're going to peak out here, US and Canada. So Facebook, really the story for them is going to have to be Europe continuing to expand this APAC. You'll see people refer to Asian Pacific as APAC. APAC is typically how you'll see it. You need this to continue to accelerate and all this to continue to accelerate. And then they need to expand into the Oculus kind of stuff too. Revenue world, man, they had a great, Facebook's just crushing it. I mean, look at this. They just seem to just keep leveling up. US and Canada, we saw that the users were kind of leveling out, but notice the revenue is not. The revenue keeps going up. So advertisers are, Facebook in one sense is finding new ways or is increasing the value they're getting out of each user, and in turn it's actually advertisers are finding more ways to advertise in front of these users. People, this wouldn't be happening if advertisers weren't seeing results. So they're putting ads on Facebook and they're getting people to click on it and buy it or retweet or share it or like it or whatever they're trying to get them to do. They're obviously doing it because this is accelerating. These are really exciting numbers. Look at this. This is really exciting. If this continues, this company is going to be this stock is going to be even more valuable than where it is today, which is about $133, I think. Critical accounting principles. If you're into CPA stuff, you can look in there. Income taxes, they'll talk about it there. Share-based compensation. So this is what they're paying to the executives, things like that. Loss contingencies. Honestly, I have no idea what that is. Business combination and valuations of goodwill. So when two companies combine, so like when they buy, Oculus or they buy WhatsApp, they'll pay more than what's tangible there. So they'll pay for things that you can't really touch or see. It's not like tangible assets, and so there's different kind of valuations for those. I wish they had that broken out here, and I could explain it to you better, but you can search the internet if you're more curious. Again, components of our results of operations. So they talk about their revenue, their advertisings, payments. They mentioned PayPal here, which is interesting. I think they have a partnership now with them. This is kind of neat. If you're with Facebook, it's kind of obvious, but their cost of revenue might not be. You might not be aware. This is server depreciation, data centers, salaries, benefits, share-based compensation, bandwidth costs, energy, operations teams. Cost of revenue on something like Under Armour, which I did another video on, would be like, the t-shirt cost. And they would obviously have salaries and benefits and share-based compensation stuff too. But they'd probably have less server equipment costs and depreciation. It'd be more inventory and design teams and stuff like that. Research and development. They tell you about it here, marketing and sales, and general administration. Some of this stuff is pretty common knowledge. Now we're back into a little bit more financial stuff, which is kind of nice. Results of operations. So here they're showing you year end. Remember, this is for the entire year, 2014. Again, oftentimes this stuff gets repeated and regurgitated to you in another way. Notice we're only about halfway through this document, but we'll speed through the last half here because it's going to be a little bit more repeating of information we've already seen. So when you see these documents and they're huge, 100 pages, don't get too intimidated. You're going to be able to get through it. Revenues, again, they're going through the costs of the revenue. This is like, again, server costs, employees. Not a ton of cost here. It's incredible. I mean, what I love about these things is now you can kind of see, okay, cost of revenue has gone up. You can now really narrow it down and break it down and zero in on these general administration costs, marketing and sales. With Facebook, it's all scaling up pretty nicely. Sometimes, though, with other companies, it's not scaling up quite as nicely. Again, this revenue line might increase like this, but maybe it's because they've 10x their marketing and sales. And so you can kind of see all that breakdown in here. Again, you come down to this net income number. This is a number you're always looking for. This is profit. This is the bottom line. That's why it's on the bottom. And it's one of the only numbers that matters, quite frankly. Again, more stuff here. Share-based compensation. They're showing you this is this is showing you the kind of almost like the hierarchy of the company. So they really value their research and development department, because look how much they share based compensation. Marketing and sales is probably more of a commission structure, and general administration gets the least amount of shares. Still a lot of shares, but I told you the total share based compensation. This is written in dollars, but again, this is in Facebook stock. So sometimes companies will refer to this as like a non-cash. That's why sometimes you see a net income number. Extract this. They take this number out and they show you net income in another way. This is cool. They show you the percent, so the cost of revenue. This just shows you how the business is scaling up. You really like to see this, that like, that these numbers have stayed actually really constant, and sometimes have like stayed the same or even gone down. So it's incredible how well the business is scaled up, and the net income continues to rise. Just incredible. This is why the stock. Sometimes people wonder why a stock goes up or down. We're showing it to you right here. This is why the stock has gone up. The revenues have gone up every year, and what hasn't gone up as fast are the costs. They've stayed in check. They've turned a ton of money to the bottom line, especially in this last year, and it's incredible. Again, they're showing it to you as a percentage of sales here. 1%, 1%, 9%. So they're hitting these developers up pretty good. Revenue. So they're showing you this is the 97% or something. So they get some other fees. I mean, look how they 750 million. I mean, this is such a small number for Facebook, but they barely even have to break it out. But Facebook is an advertising company, and they're making all their money from advertising. This is telling you revenue. This is where it's coming from. This is where it's coming from. Other companies, it's different. With Under Armour, I remember we looked at it. They had like licensing revenue. They had like clothing. They gave you footwear, which is really cool. With Facebook, it's really cut or dry. They make all their money in one column right here. And here, what these 10Ks often do, they just showed you this stuff all in numbers. Now they're going to interpret it to you down here, okay? So if you want a little bit more detail, they tell you, this is what's really valuable in the 10K. They give you some forward-looking stuff here. So look what they say here. Payments and other fees decreased. So these payments and other fees. This is like 3% of Facebook's business. We kind of want to know, hey, is this going to grow? This is like Oculus and probably some other stuff. Like, hey, is this going to grow? Or what are you guys doing here? Notice they tell you about it right here, and then they say, we anticipate payment and other fees will continue to decline in 2017. So they're not expecting that to actually pick up. Cost of revenues, again, they're showing it to you in the percentage of the revenue, and it's scaled up beautiful here. Here, again, they're showing you some forward guidance here, which is very nice. It says in 2017, we expect that the cost of revenue will increase, and we'll continue to expand our data center capacity. So they're expecting it to increase, but if it kind of increases at a steady rate, it's really not that big of a deal. Notice in 2017, we plan to continue to accelerate hiring of the software engineers. So it's telling you they're going to continue to hire people, increase investments in our hiring of marketing. So they're hiring. Here at Facebook, we plan to increase general administration expenses. So, we're increasing everything. A growing company is going to do that. A slowing company, sometimes I see this like in Fitbit, their sales are growing and they said we're going to increase everything by another 100%. That should make you nervous, and that's why Fitbit stock went from like 50 to 6. over the course of the year. It was all outlined for you in the graphs or in the 10Ks. You just had to read them. More stuff here again. More financial heavy documents here. Provision for income taxes. Notice that companies are typically provision out income tax money all year. So if this, notice their tax rate in these other years. Holy moly. So yeah, they would have had, they would have, if they're closer to this in 2017, then yeah, a lower tax rate would definitely would have a material impact on the company. But keep in mind, the companies provision this. This is why there could be kind of a late, like if you do see tax reform in the United States and it is meaningful, you might see some of these companies have literally immediate cash on the balance sheet, ready to go, ready to deploy, ready to hire somebody, ready to build something, ready. It would be almost immediate because these companies do provision, which I believe, as I'm interpreting this, it means they're setting this money aside all year long to pay income. It's not necessarily set aside literally, but on the balance sheet it is. It's literally set aside. And so if this can now be, say they can say, oh, we only need $1 million of this here. Well, there's $1 million, or in Facebook's case, it might be that we might only need $1 billion of this, and so a whole $1 billion gets put onto the balance sheet, basically. So that's why, I mean, if you're wondering why stocks have soared since Donald J. Trump has been elected, I mean, that's part of the reason right there. Quarterly results. This is incredible. So they're showing you 3 months. This is a little bit more detailed. I will tell you, Facebook is a little bit more, has been, maybe because these are so impressive. Quite frankly, these financial documents are so impressive. I think that's why they're highlighting them. I don't often see this in companies not quite as spectacular as this. So here they're showing you 3 months end. So 3 months after here, 3 months here, 3 months here, 3 months here, all the way up to essentially the current date, or when this was filed. And so it's showing you how, you have a little bit of ebbs and flows in here, but essentially it's a straight line up on the advertising side. And then they're breaking down these costs here. It's showing you, it's been a fairly steady rise, and it's not necessarily seasonal at Facebook either, with retail companies that's, even any kind of retail company is all going to make going to have huge spike of orders and sales in the fourth quarter around Christmas time. Whereas Facebook is used 24 hours a day, 7 days a week. And so they have this very steady performance throughout each quarter. And so I think that's what it's kind of what they're trying to illustrate here. I don't always see this on every company, but I think they're trying to show you look how steadily they've churned the earnings out. Never losing money across the way here. Very impressive. Again, we're seeing the same numbers here. This is 3 months ended. They're showing you these costs, and they're just kind of showing you, this is the share-based compensation here, again, per quarter. Again, here we're seeing advertising. It was less of a, they actually made, I think they had like a phone or something, maybe. Maybe I'm wrong, but some other payments and fees. Man, they're big into advertising now. It's incredible. Here's one I always like to look at: contractual obligation. I remember looking at a company, it was a clothing company, and they had a lease obligation that was greater than the market cap of the whole company. So they had agreed to move into a building, and the lease on the building was greater than what the whole entire company was worth. So, uh, operating lease obligation, again, with a company like Facebook, total contractual obligations were here. This is in millions, so we're at 3.6 billion. At a company clearing, 10 or 12 billion dollars in cash in a year, like free cash flow. This is not something to be too concerned about. It does give you a sense. Sometimes, if you're looking at like a restaurant company or a retail company, you might want to look at how these escalate and stuff like that. It might be something that you could look at. Might be some valuable information. Now, typically at these end of the or towards the end of these 10Ks, you see these indexed to the consolidated financial statements. So now they're going to go back through the financial statements. So we have the assets, so we have cash on hand, marketable securities. Here's something that I want to point out is cash and cash equivalents and marketable securities. These two things are essentially cash. Marketable securities is typically like some kind of like government bond, treasury kind of thing. And cash equivalents is like cash in the bank. So it gives you an idea. Not a ton on the liability side. Holy cow. I mean, look at this. This is why the stock has gone up so much. Total assets, basically 65 billion. Total liabilities, $5.7 billion. I mean, that's incredible. You almost never see that. I mean, you see it when the company's really good. It's incredible. Wish I had bought in shares of this company a while ago. Because this is, you know, I guess you can keep this up, but you never see this. I mean, this is, if you see this, I can't tell you on this video to go buy and sell, go buy stock or not, but I will strongly suggest if you see a company with $65 billion in assets and only $5.7 billion in liabilities, you don't have to look much further. I'll tell you that much. Man. Again, we're getting back to the revenue side. These are numbers we've seen already. All numbers we've seen already, pretty much. Again, they're going to go over a lot of this stuff over and over and over and over again. This is showing you, the total number of shares and things like that. In terms of this stock-based compensation, stock options, and things like that. This is mildly important, especially when Facebook's growth stops peaking. You want to make sure the stock-based compensation will start peaking too along with it. But for now, with the company growing as fast as it is, they need to keep acquiring great companies or great employees and stuff like that. So if they want to use the stock for that, I'd be supportive of that. Again, getting back to numbers that we've seen before, it's showing you this net cash, or essentially like free cash flow here. We start with net income, and it subtracts or adds different things and gets down to the net cash. Notice that like net income and then net cash, these are like two different things. This is where the adjustment, this is where I talk about like non-GAAP or generally accepted accounting principles is what GAAP stands for, generally accepted accounting principles. Now, non-generally accepted accounting principles will recognize that share-based compensation is not cash. Depreciation and amortization is not necessarily cash flowing out of the company, okay? Now, based on accounting rules, the company has to account for share-based compensation. They have to account for depreciation. They have to account for deferred income taxes and tax benefits and others. Okay, This is not this is not necessarily real cash per se. Okay? They're giving Facebook stock, which is worth cash, but Facebook can print. It's just like the Federal Reserve. They can print as much. It's not exactly like the Federal Reserve, but they can print as much Facebook stock as they want. In theory, it's worth money. Okay, so they add this back in. We see net cash provided by operating activities. This is the actual net cash. Okay, kind of an more technical, like balance sheet statement. This is a statement of cash flows. Like that's more technical stuff, but just something you want to think of. On Facebook, it doesn't. I don't want to say it doesn't matter, but on smaller companies, I look at this, okay, because it's like, okay, maybe the headline net income number might not give you the full story. When you got 10.2 billion in net income, not a whole lot of other stuff is really going to matter, okay? But if you've got, say this was $10,000, okay, or something like that, the company basically broke even. Well, okay, if they just broke even, but it was a lot of stairback conversation and this depreciation, okay, maybe a break even really isn't that bad. Maybe they're moving in the right direction. You see what I'm saying? So that's where like looking at this like net income and then net cash provided by operating activities can give you a sense. On something like Facebook, again, not that big of a deal. Smaller companies turning a loss, it might be that it's because they had all this depreciation and share-based compensation, or they did deferred taxes, or whatever it is. So you can kind of dissect it there. Obviously, you have all this other stuff in here too that's offsetting or increasing this number here. Sometimes it's not apparent how much cash increased or increased or decreased. They'll tell you here, typically on companies. Facebook, again, doesn't matter too much with smaller companies. This number might be, this might be $3 million, and they might have $1 million in the bank. So these numbers might really, really matter. And so you can often find this on the cash flow. Gives you an idea on the change of that. It's kind of an interesting number sometimes. Again, a little bit more consolidated look. They're giving you kind of a supplemental look where they're showing you interest, income taxes, just some more further color on this stuff. Now, looks like we're repeating some things again. Facebook was incorporated in Delaware. Here's that GAAP, generally accepted accounting principles. I believe that's what that stands for. So they're telling you sometimes they use estimates that aren't GAAP or are a part of GAAP. This is kind of neat. Property and equipment, they're showing you the useful life. And this is really broad. But it kind of gives you an idea. Still looking at some more. They actually included a lot more financial documents than I sometimes see in these 10Ks. They have their cash and cash equivalents down here. They show you what they have in some of these money market funds. Here's where they're showing you. They're actually showing you U.S. government securities, these marketable securities that I talk about. Again, government securities, stuff like that, corporate debt stuff. It's just showing you. Again, if we had a financial crisis and things like that, some of this stuff might, it's as close to cash as possible, I guess. If there's Armageddon in the streets, you, I'll just say you're probably not. Everybody's going to be worried about their money, not just Facebook at that point. So your Facebook shares going down is probably going to be the least of your concerns if Facebook's worried about the government paying them back. Again, more color on that. Still more color on that stuff. Showing you that they have some land, building, network equipment, things like that. Giving you a little more detailed information on that. It's pretty cool. This is interesting. They're showing you acquired users. So they're showing you, and they're showing you the useful life of these users here, which is got to be a stretch in terms of how they can estimate this. This could be either right on, really low, or really high. I have no idea. I don't know how they do either, but I'm sure they have more data than I do. But it's pretty interesting that they're giving you kind of really, really minute details here. With a company as large as Facebook, these numbers are so small that it's not that big of a deal. I mean, this is only, this is 930 million. But what's really interesting, they show you these user numbers here, which I think is really interesting. And they're like depreciating their like users a little bit, which is really, really cool to see, I guess. Never seen that, or I don't see that very often. Again, income tax payable. I know I talk a lot of it about it, but this is what's driving the stock market right now is this bottom line income tax. This is $2.4 billion. So, a lot of things can change. Be interesting. Getting back into lease payments here. Talking again, share repurchase, share-based compensation, stuff we've kind of gone over. The common stock, they kind of talk about how many shares are authorized, how many shares they can issue. This is very interesting for very small companies. Sometimes you see some huge numbers in here, and it makes you really nervous about the dilution they can do. More share-based compensation stuff, employee stuff down in here. It's kind of interesting. We saw those geographical trends earlier, but this is showing you, here's our revenue in the United States. Here it is the rest of the world. Notice they actually made more money in the rest of the world. So um, Facebook, is growing faster in the rest of the world, and it's now overtaken the United States. Pretty interesting to see. It's actually been that way for a while. But again, most of their, they're making America great again. Most of their property and equipment is in the United States. Kind of interesting. More legal mumbo jumbo, I would call this stuff. And we're getting very close to that. Once you start seeing signatures of the chief financial officer, typically, that's a great thing. Now we got more signatures. Mark Zuckerberg and crew, Sheryl Sandberg. Very cool. So, folks, you can hit the disco music and start to party because, again, once you start seeing signatures, it's all formalities after that. That, folks, was over 90 pages of fun there. So now you know how to read a 10K. Again, I want to stress that the 10Ks are great for giving you an overview of the company if it's close to when this was put out, typically they're put out right around this time. I'm recording this video right at the first part of the year, the first quarter of the year. So it's February 2017. A lot of companies are putting out their 10Ks right then. Kind of depends. The movie industry, I think, is on a different season. Some of these other companies are on different, software companies sometimes on different seasons. But most companies end their quarter at the end of the year, and then they come out with a 10K right at the beginning of the year. Kind of recaps the whole last year. If you want to look at it like a company on a yearly basis, like how they have been doing over the last couple years, the 10K is a great spot. If you want to look how a company's just been doing just in the last couple months, like how, I know maybe you knew everything about Facebook and you just wanted to know what their net income was, you can just boom, go to an earnings release, or you can go really to the 10Q is often really going to lead you to a lot of this stuff. You can bang, pop up this 10Q, like we said, and then get through a little bit of the legal mumbo jumbo, and then boom, we're jumping right into this marketable. Remember, marketable securities, cash. This is basically the same thing. We can come down. Now we got a revenue line, and notice they're breaking out this for 3 months. So this is a much more micro view. So they're giving you 9 months and 3-month look, whereas the 10K, the annual, is going to give you kind of a yearly. Now they broke it down quarter by quarter on some of the stats here in the Facebook, which I don't often see, but they did here on the quarterly reports. It's going to break down in a 3-month and a 9-month or a year-over-year type thing, and it's pretty cool. Notice these 10Qs jump all. Now we're jumping into cash flow. And we start seeing all the stuff we saw at the end of the 10K is actually typically at the top of a 10Q. And I will say a red flag for me is if I open up a company's 10Q and I don't start seeing financials. If all I see is words, and then it gets to financials all the way down here, that's a red flag for me. It should be flipped. Notice we start seeing some of the stuff in this 10Q. We start seeing it actually here. We saw these graphs in the 10Q. They copy and paste this stuff. I mean, they can't turn this stuff out all the time. So a lot of this stuff is copy and paste. That's what's so cool about these financial documents. You might say, oh, it's 100 pages, man. Well, you can get through it one time, and now it's going to make the rest of your research process a little faster. You're going to know where this stuff is. This is all repeated stuff. All this stuff is just copy and pasted over, and they put the most recent month in there. But all this other stuff, this is all straight from the 10K. So once you know how to read this, you know how to read these 10Qs, okay? And that's even more important or even as valuable. So hopefully that helps. Leave any questions in the comments. Send me a message too on YouTube. Suggest any companies. If there's any companies you want us to overview, more than willing to do that. But hey, thanks for hanging in. Again, hit the subscribe button. Leave me a comment, a thumbs up, a thumbs down, whatever you feel like. I appreciate you guys hanging with me. Thanks for tuning into my video. Be sure to check out the other ones I've got. I've got a couple other companies where I've gone through this exact same process. Check it out if you want to. Thanks for tuning in.